Wall Street has figured out a way, ladies and gentlemen, to make more money killing companies than building them. What could be more sick than that?
Hi, it's Roger Hamilton here, the CEO of Genius Group, and I'm about to share with you a frightening video of Wes Christian talking about just how massive the fraud is on Wall Street right now when it comes to illegal short selling, which is driving down the price of so many different companies, including AMC, including GameStop, including our own company, and it is affecting the CEOs and the teams and the customers of those companies, together with all the retail investors that are invested in these companies as well. Our company, Genius Group, we had our IPO at $6 a share in April last year. And since then, because of our growth, we've had analysts that have given these kind of reports, from Diamond giving us a price target of like $11 a share, or like this one here from Zacks, which is giving us a price target of $18 a share, and then upgrading that to $19 a share. And then this is our share price. It's gone right down to under 40 cents, which is absolutely ridiculous. And this is because of this illegal practice. So when we found out this was happening, we got Wes on board. He's proven that this is happening, as you're going to hear. And just to be clear, our company, Genius Group, is a fast-growing company that was growing 50% year over year before we had the IPO. And then we just had our earnings report where we just shared that we had grown by 60%. In fact, here are some of our slides from our earnings call, where we've been sharing about our Metaversity launch, our AI Genie, which is providing personalized pathways, partnerships with thought leaders that have already between them influenced millions of people, and also our student growth, where we've now got over 4 million students on our platform. And as well as showing our revenue growth and our gross margin growth, we also showed our balance sheet, which has grown to over $90 million in assets this year and $60 million in net assets, compared to now market cap, which is under 10 million, because of what they've done to our share price. So for us, this is a fight. We hope you'll come join it. Now here's Wes.
Thank you, Roger, for having me. We can never bring too much light to what's going on in this illegal space. Our team started in 2000. I think we actually filed the first naked short selling case. For that matter, I think we were the first ones to discover it. And that's been demonstrated in the most recent documentary, Gaming Wall Street, by HBO Max. If your investors would watch that, it would help them understand how this happens and really how we uncovered it back in 2000 with Suzanne Trimbath, who used to work at the Depository Trust Corporation. Of course, the Depository Trust Corporation clears about $1 quadrillion of financial transactions a year. And in fact, from where we sit, they're the main members of that company. It's a privately owned company. It's a self-regulated company. It's overseen by the SEC, but many of the members of that company are, in fact, the perpetrators. So we call that in Texas the fox in the hen house. Okay, so we uncovered it first in our case Internet Law Library. I'm not going to go through every case. I'll just highlight some of them. We've prosecuted 21 cases now in this space. We've done due diligence on over 72 companies, public companies. We helped lobby and get Reg Show passed that became effective in January of 2005. When Reg Show first came out, there were thousands of companies on the Reg Show list. But guess what? We're dealing with people that are very smart. So what did they do? They started marking all the tickets long versus short, because that way they don't show up in your short interest, which really means in the typical case, Roger, frankly, your short interest from where we sit, after looking at hundreds and hundreds of millions of pages of documents in 20 years, literally, our team, it's probably 2 to 3 times what the reported short interest is, because the SEC doesn't report that number unless it's marked short. If it's marked long and it results in a fail, then ultimately it's not shown in your short interest. In any event,
if I could just for the layman on the call, just to go through that difference, because some people might look at what's the short interest on Genius Group and say, hey, it doesn't look like you're being shorted that much. But what we're really saying here is that when the broker is marking up that this was a transaction that happened, they aren't saying this was a short sale where someone has sold something they don't have. They actually said, no, this is a real sale where they actually bought it and it was a real thing that actually sold, and they're just covering that up until they manage to capture the other side. But
that's exactly right, Roger. And again, don't just believe what I say. Go to sec.gov, go to FINRA's website and look at about 150 to 200 regulatory fines that have been issued to corroborate everything I'm going to tell you on this call today, including the mismarking of tickets, which is a violation of Reg Show. It's further dissemination of false information into the marketplace. And that's really what this case at its most fundamental level is about. And it's about telling people that these are real shares. It's about telling people that I loaned real shares. It's about telling people this is a short sale versus, a long sale versus a short sale. It's about, selling shares you don't have and never delivering them. It's about spoofing, which is, again, misinformation, posting baiting orders in order to send a stock down. So ultimately, we put together a team. You can learn about our team if you want to go to our firm's website, or I actually help fund a nonprofit that's run by what I would call the super stock people, the Wall Street Bets people. It used to be some of the Reddit people. It's a nonprofit. Those people work there for no compensation. They can go to nakedtruth.info, and you can see actually a sample of some of the complaints we filed. You can see a lot of these fines that have been issued by FINRA or SEC recently.
Wes, I'm just going to help you along here. This here is there's actually a really good FAQ that you actually did on the Naked Truth site, and it gives the Naked Truth website here as well, which explains everything you're doing and what's happening. So I'm going to drop this link in the chat, and also this is a link to your Christian Levine law firm as well, which I'm going to drop in as well. And I thought there's some super interesting things, like even this here was from retail investors to try and hire you as an AMC manipulator, where they wanted to raise $100,000 and they ended up actually hitting their amount to get that as well. And as you were sharing basically what's been happening recently, I'd love for you to share how having retail investors get behind a company can really help a lot at really trying to.
No question, I will. So our team that we put together consists of Bob Blakey, who wrote the racketeering statute, and the RICO statute does not apply to federal claims for stock manipulation, but it does apply to state law claims. Many states have a state RICO statute here in the States too, which is automatic treble damages if you satisfy certain predicates. It consists of Rob Shapiro, who's the former Undersecretary of Commerce. Rob runs a company called Sonacon. It consists of my partner in these cases. John O'Quinn was my original partner, which was the lawyer that took down tobacco in Texas. He got us over $17 billion award settlement against the tobacco companies. But he sadly died in a very mysterious car wreck, let's call it that, 12 years ago. And ultimately, I found Warshaw Bernstein and Mr. Alan Pollock, who is my partner in these cases. Since then, I brought on other law firms. If you want to go to two pending cases that we've done, you can go to Northwest Bio. I brought in a firm called Warshaw Bernstein to help with that case. We're kind of expanding our bench as this case grows, if you will. And then there's another case called Harrington, Harington. Both of those are pending in New York. Both of those are spoofing cases. But at the end of the day, our team consists of about 25 to 30 professionals that are the top backroom analysts. They understand stock lending. They understand clearing and settlement. They understand all the games that are played. We've uncovered crazy things like, they'll put a put and a call of 50,000 shares on the option market, and they think that's a synthetic share, but the contract's never consummated. So 2 days before that option is to expire, they tear it up, and ultimately those synthetic shares go away. So it's really about fake information in the marketplace. I would also send your investors to a prior documentary that just got made public. The original owner of that documentary has decided ultimately to put it on YouTube or somehow on the internet. It's called The Wall Street Conspiracy. That was made about 7 years ago. That was about our client Overstock.com. That was about our client, the Taser Gun Company. That was about our client, Pet Quarters Inc., our client, Eagle Tech Communications, et cetera. At the end of the day, this is systemic. This isn't just in the States, it's worldwide. The bad news is for the perpetrators of this is more law firms, not only our group of law firms, but other law firms are starting to get on the train here to expose this and prosecute this. Recently, Morgan's as a company got fined over $900 million. Finally, a sizable fine, for their spoofing of the metals market. They also got criminally prosecuted. Three of their what I would call officers in the company got prosecuted and convicted. Okay, now whether that's on appeal, but what I think you're going to see is more criminal prosecutions. So the playing field's changed in our favor for us, and I'll tell you why. By the time you count the what I'm told is 10 million Reddit Wall Street bets, apes worldwide, by the time you count you and your company and the other companies now that are finally deciding to do due diligence on their company, now that they know the software exists for this, the proprietary systems we have for this, that we can actually root this out over time. There's a lot of companies, not just with us, but other firms, which I welcome, doing this, including in Canada. And in fact, there's going to be some that show up in London, because a lot of these undelivered shares, Roger, I believe, are not in the States. Don't forget, besides clearing through the DTC, there's a thing called X clearing. That's broker to broker. So the information we're getting, for example, if you want to talk about your company specifically, we found some large imbalances in your company. Imbalances are counterfeit shares. But that's just through the DTC, Roger. That's just the first layer of the onion. You have to peel that back and do ultimately more analytics, which will take a lawsuit, which we'll be talking about, later with you and the rest of your board. The bottom line is X clearing, I believe, is now a bigger issue because these perpetrators know that we now know how to find this. So how do they avoid that? They don't go through the DTC, which has an audit trail, ultimately, because it has daily position reports, right, that you as a company can receive. In fact, that's how Share Intel got some of this data that when you hired them and allowed them to do that service, the DTC provides you that service. It tells you how many shares each broker has each day. And so ultimately, though, that only applies to shares that they clear. Well, X clearing doesn't count that. Okay. Some dark pools don't count that. Them selling the shares here, but then bifurcating the delivery, and the delivery outside the DTC goes to Canada and goes to London and these other places. And guess what? I haven't proven this yet, but I believe those shares just sit there undelivered. And I call it the graveyard of shares. Okay. And so ultimately, this is systemic. Wall Street has figured out a way, ladies and gentlemen, to make more money killing companies than building them. What could be more sick than that? It's the most disgusting financial fraud. I believe, this is my personal belief, but this was all this is also John O'Quinn's belief, who was a billionaire. And it's our team's belief that this is the largest commercial fraud in U.S. history. And it's being perpetrated by our prime brokers and some hedge funds, but mainly the prime brokers. Don't forget, prime brokers have a prop trading desk and they have stock lending. And in many of these cases, I can't talk about specific cases. The SEC and FINRA have already said this in these regulatory fines. They're lending far more shares than they have. They'll give locates. They will publish easy to borrow when it's hard to borrow. Each day there's a list that's published, hard to borrow stocks, easy to borrow stocks, okay? I haven't gotten this information on your company yet, but I'll bet it's on the hard to borrow list, but that doesn't stop Wall Street. They'll say it's easy to borrow. They've even pre-programmed computers, go to the SEC.gov and see the fines to say it's a long when it's a short automatically in the software. In other words, it doesn't take any human being to do it. It's pre-programmed. Well, that's like premeditated financial murder, okay, is what it is. So as I said on Fox Business News, this is simply stealing. That's what it is. At its base level, it's people stealing money, stealing jobs, hurting companies, including companies like yours that do great things. I mean, Northwest Bio, for God's sakes, has immunotherapy for neoblastoma for brain cancer, okay? And it works. And so can you imagine them attacking that company? So again, there's an endless number of these stories. our team is committed to do more and more of these, and we're having to, beef up our team in order to handle all that. But we're in a good time to do this because the SEC is getting put in a box. The Justice Department is now prosecuting them criminally. The group of investors worldwide are growing and are pissed off. Okay, they're tired of this. They're tired of not letting a company make it or break it on their own, because Wall Street has tried to figure out some of these nuances. So, what investors need to do is they need to support these companies, which is what the Reddit Wall Street Bets super stock people do, and I hope your investors do. Secondly, they need to get their congressmen, their senators, regardless of what province they're in Canada or what state they're in the United States. This is about a movement. This is about a rebellion. This is about in effect a revolution in part against our financial markets, and it's going to take every investor, every board member, every lawyer, every consultant and expert to bring this down. It's that large. So ultimately, you expose it one case at a time, one share at a time, and just root it out. Yeah. So that's kind of the overview.
Great overview, Wes. And I'm super happy, as I'm sure all of our shareholders and our whole team is, that you're basically working with us. And I think it's fabulous that our last acquisition was a documentary company, and that there's nothing better than for us to be able to be an example of how it's possible to bring retail investors together and get behind a mission-driven company to make a difference. And I think so many people were so burned by what they saw happen with the whole GameStop squeeze that then got shut down by Robinhood, and like everyone's ready for another run at this thing, right? So I think that we have a number of things going for us, which they didn't have going for them. I think the two biggest ones, and I just want to walk through a couple of the different actions that we can now take collectively together as well. I'm actually going to do this for everyone as well, just before I go through those actions and what I think is different between us and the likes of GameStop. The first one is that there is a link to this is the Wall Street Conspiracy, down the rabbit hole. This is a sequel. There you can go find the original as well. You can watch it for free on this link here. So I'm going to give you this link. And then each of the companies that Wes already mentioned, there's this one here, Northwest, that basically goes through their story. This is from Washington Post. This one here, which is basically the second company that was mentioned, Harrington's. And then I also like there's one which I find very fascinating that you're actually working with now, called Created, where they're putting all these different elements in place. I think they've got their EGM like this week. They're doing
that's Jeremy Frommer's CEO. Yes, we're working with them also.
Yeah,
and you're gonna see, Roger. You're gonna see, and I can't get into specifics, but you're gonna see in the next month, in addition to whatever action we are going to talk about with your company, you're going to see the mother lode of all shares that have been issued that don't exist come to the forefront. It is going to pale GameStop. It is going to pale AMC. It's going to pale any of it because of how they've the action that they've taken. So I can't say which company, but I can tell you there's more coming, and so your shareholders need to pay attention, because ultimately this could be a turning point for all of us if that case can make it to first base, and we believe it can. So,
right. So just going through each of the different steps, what our team can do, what investors can do, what you can do to help. If we were to break it down into three different elements, the very first one, which is by far the most important, is if our company does not need money from the markets, then we've got all the time in the world to solve this, and our investors can know that we're going to keep on performing, keep on growing, keep on having analysts giving us higher and higher price targets. And eventually at some point, there's going to be enough buying pressure on the stock. So the first thing is have patience. And for us, make sure we're cash flow positive. And that's one big thing that as we actually go through this year, you're going to hear this again and again from our management team, is that this is our focus, to make sure we have a solid business, which isn't in danger of what these guys want, which is to push us out of business, so they never have to cover their shares, right? Because the company went bust. And I'm sure there's many companies.
That is what we call the coup de grace, okay? That is the coup de grace. It has happened in several companies that ultimately did not hire us, unfortunately, and they took them into bankruptcy. And when that happens, ladies and gentlemen, it is the crime of the century, because a bankruptcy judge signs an order canceling the equity, okay? Because the equity holders rarely get anything out of a bankruptcy. And that allowed the criminals to go free. And I'm even told by a tax lawyer, they didn't even pay taxes on it. So unimaginable to me. So
Right.
You're exactly right, Roger.
Right. So that very first one there, well, management team, we can make that happen by basically just having a very clear focus, which is different. And when we get to Q&A, I know some of you ask questions about that, and basically do be aware that what we're doing with that is really quite different from what all the other edtech companies are doing, where they're all still burning through cash, right? Where we're like, no, we want to be ahead of this whole game because of what's happening right now. The second thing is if a bunch of short sellers push our price down by selling fake shares from $5 to $2.50, and then it goes straight up to $5 again, they can't make money because they've got to cover themselves back over the next 2 months at the $5 unless they just are constantly exposed. And so the biggest second thing is that we have enough people wanting to buy the shares. When we saw the likes of that happening in GameStop, for example, then everyone has to cover to buy their own shares back as well. And so then you have this short squeeze, the price goes up massively. That's down to what we can do by making sure retail investors are aware of what's happening to us, that we are under attack. And as you say, if we have enough people coordinated for a good enough amount of time, then we can fight back that way alone by having investors behind us. And so that is the second thing that everyone's support. The third element, which is the fact that, well, that might slow down people wanting to buy our shares or sell our shares illegally and go do it on somebody else. But the third thing is then, how do we expose this or flush it out? Like you were just saying, you were about to do this with some other companies. And there are a couple of different mechanisms that other companies are using towards this. I just want to share a couple that I know of and that we're discussing internally to see which ones we do. I could see, for example, if I just take Created as an example, they're investigating a dual listing because they say, hey, if we're listed on another exchange, then this could be much more difficult for someone to control our price and push it down. They're also looking at special dividends because if you're going out to the market with a special dividend, then basically you're forcing the DTCC to force the brokers to say how many shares are out there. And so they basically get caught with their pants down. As you've said to me in the past, the problem with that is some of these brokers will rather just pay the dividend off themselves and pretend they still got less shares. So it has to be something like the blockchain based or selling, actual shares in a subsidiary or something like that, that actually means that you're forced to have to go down the line of actually exposing that.
Or maybe selling shares to a private company,
Right.
So
exactly.
You've seen Torchlight and MyMeta do that. Go look that up. So.
Got it. Another thing is doing a special dividend in a different format, or even what AMC did, which didn't really work for them in terms of doing the additional ape shares, right? But having preference shares or some other mechanisms like that. And another part is even delisting and listing again somewhere else, right? Which actually forces everyone to have to then basically figure it out. And we're not saying we're going to do any of these at the moment. We're looking at all of them, and we're getting your advice on the best path forward as well. But I do want our investors to know there are different options that can be taken that will at least basically help us to expose just how bad this issue is. Do you want to just share or put any color on that in terms of what you've seen working or that you've seen companies trying right
Yes, now? Yeah, I'll be happy to do that. The most successful one, I think, and it may not be an option for you, is what Torchlight did and MyMeta did, essentially issuing a preferred share in addition to when Torchlight merged with MyMeta, which was a Canadian company. This is an oil and gas company. Torchlight was. MyMeta or Meta Materials is a different company, not oil and gas. But in essence, that company merged with Torchlight, and as such, Torchlight owned 25% of the shares of Meta. But in addition, when you got a Meta share, you got a preferred A share, which allowed you to convert that into a share of a private company that's not tradable. And ultimately, you're going to see that caused massive havoc. In fact, FINRA actually shut the trading down, but of course, only on the buy side, not on the sell side, similar to GameStop. So that's an idea. I'll tell you some other ideas that are very simple that your investors need to really listen to this next statement. They need to take their shares out of margin accounts, okay? Every margin account agreement in the United States that I've read of Merrill, Goldman, Credit Suisse, UBS, Morgan, down the list, says that if you're in margin, they can lend your shares in the fine print. And incidentally, when they lend their shares, They're going to short sellers, which are diametrically opposed to what you want the stock to do to go up. It's crazy. But believe it or not, that's legal. That's not what our cases are about. So take your friggin' shares out of margin. That's number one. Number two, put them in cash account, which in the States, not in Canada. I went up and gave a speech in Canada. Believe it or not, it's legal for them to loan your cash account shares in Canada, but not in the States. Under Rule 15C33, they have to be segregated almost in a separate group of assets because the company cannot encumber them, okay, which is what they're doing when you're in margin because they're loaning you money to buy more stock, right? So take them out of margin and then put them in cash accounts and get a written confirmation from your broker that they are not lending your cash account shares because believe it or not, they lend cash account shares too. These people in general do not care, okay? And when they run out of cash account shares, they're going to lend nothing except air, but of course collect all the money, the negative rebate they call it, for the loan. So your customers or investors need to understand that, and especially for anybody that owns large groups of shares, get those shares out. And if you don't need to trade them, take them out of the DTC and put them in your vault. Now, most people aren't going to do that because they want to trade their shares, but at least get them out of margin, at least put them in cash account, and at least get your investors to have their broker confirm in writing they're not lending their shares and they're not going to lend their shares. So that's important. Other ideas are the dividend idea. Our team would like to be involved when you're going to talk to your SEC lawyers about those different alternatives. I'd rather not get into specifics here because I think it gives up some strategy, but I do think there are multiple ideas to box this, okay? And then, of course, what you're already doing, which is monitoring this daily and tracking this in real time through the DTC. And then we're going to have other discussions, which, again, I'm not going to get into the detail of because it's privilege, about, some other things we can do. I think that's scheduled actually for tomorrow morning. So we'll talk about some of that tomorrow. But there's certainly, with the level of fails you have, with the level of imbalances you have and what we see going on with our analytics, your stock, we believe strongly, is being manipulated. We have the identities of some of those, but we're still going to take several more months to put all this together. But in the meantime, you have the same symptoms of the other companies that we've looked at that unfortunately are under siege by these people, these criminals, basically. Okay, so ultimately, I think we'll all prevail in this. For the most part, the vast majority of the companies that we've represented have made it, and that's the most important part. You brought up Patrick Byrne. Some people think he's a Looney Tune. Well, they thought I was a Looney Tune too. When I first showed up in court. Just a funny story for you and your investors. The judge looked at me and said, "Mr. Christian, next time when you come back to court," this was in New York, I'm licensed in New York too, "why don't you just wear a spacesuit?" Okay. And I'm like, "Your Honor, if you knew how much time I put into this is real, Judge. This is real." "Sure, Mr. Christian. Why isn't the SEC doing something about it?" Well, let's don't get into that. That's a long story. You can figure that out for yourself. When Overstock went to the SEC with the information, Overstock got investigated. When Taser Gun Company went to the SEC with their investigation, which we had black and white evidence, they got investigated. So now some of that's changed. The current Mr. Gensler is at least trying to do something, although the new rules, just so I'm on the record on this, really do not address or help this situation. It helps a lot of other things: insider trading, some more disclosures, this and that, some more transparency. But it doesn't say you must deliver shares. It doesn't eliminate the bona fide market maker exemption. There aren't many market makers I know that are bona fide. And number three, you can only loan the share once. And until you fix those three things, this is going to continue. And blockchain, at least, Patrick Byrne and Overstock did the first blockchain signed off by the SEC. That really hasn't worked either. It's worked to stop the fraud, but there's not enough liquidity in that right. space and that platform really to make it work. I was peripherally involved in that with their general counsel, who's a good friend of mine, Mark Griffin. So ultimately, we're on the right trail. We will prevail in this at some level. It's enormously complex, but the bad news for the bad guys is they know and we know how to find all this. It just takes time and persistence and sadly money. And so if there ever was a time to support this company, it would be now, because ultimately you cannot allow these people to prevail. And I think the worm is turning, not just in your company over time, but in this whole space, because there's more attention by very, very large groups of people. And ultimately, this is about a revolution against the system. That's what it's about. So,
yeah. Well, with something I'll share with you, and also for all of our investors on here as well, is, well, first of all, just thank you so much for just sharing, and great to have you on board, because like you've been at this for so long. And if there's one thing that everyone knows about me, it is that when there's a problem, we're going to solve it. And if it's a hard problem, we're going to be even more determined to solve it, right? And 100%, we're not going to let any criminals be taking down our mission and our business and where we're going with this as well, provided we continue with the support from all of our investors and bring on board everyone that you know on board as well that actually would care about this. Because if there's one thing we know how to do, is to build a movement. And this is a whole new area that I'm just learning about. But there are 100% solutions, which are making sure that we basically cancel out the wrong with what's right and moving forward in this way. I want to just finish with basically a quick question. There were a couple of questions that came through. I'm going to get to the Q&A in a moment with everyone, but I wanted to just finish this little interview with you with a few that came through.
Yeah, I've got 5 more minutes. So
okay, great. So a quick one. This first one I can answer pretty quick. You might want to add on to it as well. This one says, it's from Bash Ali. It says, wow, I wonder how Musk and Jeff and other big boys dealt with this. Surely they must be, also well aware of naked short selling. I just want to say one thing from my personal point of view, Elon Musk tweeted out, SEC stands for Short Seller Enrichment Commission, right? Like, because he was so frustrated about this, how he ended up solving it eventually was just through grit and just getting more and more of an army of retail investors behind him, until eventually the short sellers just got tired of it. And it's not like they don't still make money from him, but it is much, much more difficult now because of what's happened, although I'm sure he's getting hit by them a lot at the moment as well. And you might have another perspective on that, but there's one thing which is probably one I can't answer, which is from Ross Gowdy, who says, just in terms of, I think it's here, is this kind of thing getting worse, these eyes of fraud, with the likes of BlackRock or effectively any of these AI-based companies out there? I have a suspicion that what's happening to us could be run by bots, where someone just programmed it in to say when volumes go this much on Genius, then start selling and so on. But I have no evidence of any of that. What do you think? Is this going to get a worse thing? What do you think?
Well, Kel, yeah. So let me add to your first one. So it's so important that you raise the money you need to stay, in business, and that you expand your business and maintain profitability. You continue to build that income stream, that net income, that EBITDA, whatever you want to say, is critical, because guess what? It makes it harder for them to perpetrate their lies, okay? Because don't forget, they've got people in the press bashing you typically. They've got people on boards bashing you. Incidentally, most of those people are paid by the bad people. They got class action lawsuits they bring against you. Like Patrick Burns said, it's a perfect storm. I got class action lawsuits and SEC investigation. They're saying I'm a fraud on the boards. The Fortune wrote a negative article about Overstock and down the list. Okay, expect it all, because these financial people own the financial press too. I mean, I not own them, but they heavily influence them. So it's so important you continue to build your business and grow and beat them that way. Okay, because that's a critical component for our experts to say, this company is making money. So when it makes money, the stock goes up. Jurors understand that. It's real simple. Okay. Now, if you're losing your rear end, okay, it's more difficult for me to convince a jury that this manipulation is really materially impacting you. So having that support and growing your business, right on, buddy. That's right on the money. On the other, I'm sorry, what was the second question? Oh, is it getting worse?
AI, AI driven.
So there is no question. Look at our Harrington complaint and Northwest Bio complaint in New York. There is no question that this is to some extent pre-programmed. There are logarithms that are being built to do this spoofing. Okay, period. Again, that's premeditated murder. Spoofing essentially posts all these offers up. Okay, stacks them up in big blocks, ultimately to send the stock to hell, okay? And then once it drops down, by 20%, they'll go in and buy it in and repeat the process, okay? none of those offers ever got consummated. They take them down 2 minutes before the close. Again, this is about, at its base level, I like keeping things simple. It's about lying, it's about cheating, it's about stealing. Okay, so is it getting better? I mean, getting more? No, I think it's starting to get less, and here's why. Many of the hedge funds have been run out of business. Okay, because they're cracking down on this, including the clearing firms, because they see a freight train coming. They understand we're getting close to this blowing up. Now, that's the negative. It's, ultimately this has got to get solved. How it gets solved without blowing up the world, I don't know. Okay, because some of our experts think it's, a massive problem. But at the end of the day, it will get solved. Okay, it's no different than 2008 or anything else. So at the end of the day, I think it's diminishing, not growing, but it's certainly persistent and there. And unfortunately, companies with a 2 billion or less market cap are the most vulnerable, regardless of what you do or what your business plan is. So, but I'm telling you, we have them on the run on this, in my opinion, not just because of our legal team, because of you and the other probably 10 or 15 or 20 companies that are jumping on this freight train at one time to start a movement, and add to that the Reddit group and everything else, and regulators who frankly are afraid for their life. I talked to a Canadian regulator, a board member, that said, my God, I may have to move, okay, and become anonymous because they're going to come lynch me, okay? So, and I'm serious. So that's where this is headed, is more people understand that their pension funds have been raided, that the entire wealth of one generation has been wiped out. I mean, our experts say it's over $100 trillion in 20 years out of our economy that they've stolen. Now that counts credit default swaps, stocks, bonds, T-bills, everything, not just common stock. Common stock maybe is only 20 trillion, okay, over 20 years, $1 trillion a year, no big deal. So anyway, we're gonna get there. I'm optimistic. We don't really make any money unless we win these cases. So at the end of the day, we're Texas Hold'em all in, and unless I'm in a pine box somewhere, this is going to continue. Okay.
Thank you so much, Wes, for just coming and sharing light on this. And can everyone just please post a thank you, Wes, or some kind of gratitude to Wes in the comments, because it's not normal for him to come and just give so much time as he has to us, and I really, really appreciate it. I know you got another call to go to, Wes, so I want to say thanks so much.
I do, and thank you. Go forward and let's go get them. Okay.
So thanks so much for watching this. I would love to hear your thoughts and comments down below, and do make sure that if there's anyone that you know of that should see this, please do share it with them. Like I said before, if you are a CEO of one of the companies being affected, let's work on this together. You can connect with me directly on either YouTube or Twitter. And at the same time, if you are a retail investor, I want to just leave you with this message, which is on my mug, which is never, never, never give up. We'll see you on our next video.